All right, I got a question from one of our channel members, Michael Glee, asking which stock is a better buy, Amazon or Qualcomm? And I thought that was a really interesting video to consider, given that both companies are doing really well lately. So in this video, I'm going to answer that question, which one I think is the better investment, Amazon or Qualcomm, evaluating these two companies across several critical financial metrics, including revenue growth, operating profit margins, cash flows from operations, returns on invested capital, the prospects ahead 5 years, looking ahead at what Wall Street expects out of these two companies over the next 5 years, and finally looking at the valuation and determining which one is the better investment. So let's get into it. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so starting with revenue growth, we noticed a couple of things here with Amazon and Qualcomm. Number one, I noticed that their revenue growth over the most recent quarter is almost equal, 10% for Amazon and 11% for Qualcomm. I also notice much more volatility in Qualcomm's revenue growth on a quarterly basis, and that's understandable. Qualcomm is more of a semiconductor business, and that industry is more cyclical, more volatile than the businesses that Amazon operates in. Longer term, Amazon, in more quarters than not, generates better revenue growth than Qualcomm, and I expect that to be the case in the longer run. Amazon operates in several segments, some of them very fast-growing segments like its cloud services segment, the advertising segment, are growing above 20% quarterly. And then its e-commerce segment is still in growth mode and still has a long runway for growth. On top of that, Amazon has other categories it's opening as a result of the sheer magnitude of its business and grand ambitions. Qualcomm also experiencing very nice growth prospects looking ahead. The Snapdragon platform attempting to gain market share in personal computers, the rising computational needs in automotive segments has been a tailwind and continues to be a tailwind for Qualcomm. So it has excellent prospects as well. However, I think revenue growth over the next 10 years, I would give the advantage to Amazon over Qualcomm, but it would be close. It's going to be close. The next thing I wanted to compare these two on is operating profit margin. And again, I noticed two things here between Amazon and Qualcomm on operating profit margin. Number one, we noticed that Qualcomm is well ahead of Amazon in the operating profit margin, and that's been the case for the last decade. I expect that to be the case going forward as well. Qualcomm operates on the asset-light business model. It's a designer of the semiconductor chips. It doesn't manufacture the chips, it outsources that. And so the most capital-intensive part of the business, it outsources. And so that lowers the capital intensity, which increases profit margins. That said, Amazon is the opposite of that. Amazon is extremely capital-intensive. It doesn't seem to outsource anything. It wants to do everything itself. And it's been really good at doing very many of the things that it does day to day. And those that it finds it's not good at, it's quick to just say, you know what, that's something we're not good at. And they just stop doing it. And one thing you notice with Amazon over the last decade is great improvement in profitability. Their operating profit margin was close to 0% in 2015. And you can see it steadily rising all the way up to 9% in the most recent trailing 12-month period. And I expect that will persist slowly, but surely higher over the next decade as the company's advertising business, cloud servicing business start to grow to become a larger percentage of the business overall. And then the existing larger revenue segment, the e-commerce segment, has grown to a scale where it's consistently profitable now in both the domestic market and the international market. So it's hit that inflection point where that segment is profitable in most quarters. And so I expect that will continue going forward because of the scale the business already operates in, right? If Amazon is already delivering something in your neighborhood and there's one more customer in that same neighborhood that orders something, that lowers Amazon's cost to serve. And now it's grown to such a large size that it's got customers all over the world in nearly all the neighborhoods. And so the business is improving very nicely. Cash flow from operations, very similar story to operating profit margin. Qualcomm much better in this regard, but Amazon demonstrating better improvement in this regard. 17.86% for Amazon versus 36% for Qualcomm, but Amazon's trend line growth is better than Qualcomm's. Qualcomm has improved from like 31% to 36% in the last decade, whereas Amazon has improved from 8% to 18% in the last decade, more than doubling its CFO to sales. Looking ahead, the analysts on Wall Street that are following Qualcomm stock, they expect it will grow its earnings per share by 12.6% over the next 5 years, whereas the analysts that are following Amazon stock, they think it will grow its earnings per share by 32% over the next 5 years. So Amazon expected to grow its earnings by roughly triple the rate of Qualcomm, a huge advantage here for Amazon in growth in earnings per share expected over the next 5 years. Return on invested capital measures how good a company is at taking investor money and turning it into profits. And in this regard, they're really close. But again, Amazon with the better improvements. So 22.8% for Qualcomm, 17% for Amazon. But Amazon has improved from negative 2% in this metric up to 17%. Qualcomm relatively flat in the last decade with volatility. So I think the common theme we're seeing from Amazon across the previous decade is improvement, steady improvement across the myriad of critical financial metrics that I follow when I'm evaluating a business, compared to Qualcomm, which has better levels, but it doesn't have the improvement of Amazon, and it has more volatility because of the cyclicality of the business overall. Now, when we get to valuation, we see a huge difference as well. Amazon is trading at a forward price to earnings of 32, whereas Qualcomm is trading at a forward price to earnings of 13.6. So Qualcomm is less than half the valuation of Amazon. And if I was to say which one is the better business to buy here, I think they're close. I have Amazon rated as a buy. I have Qualcomm stock rated as a buy. I think they're both excellent businesses. Qualcomm's valuation is really inexpensive compared to Amazon. But when we compare to growth prospects, remember, Qualcomm forward PE of 13, EPS growth expected of 12.6. Amazon forward PE of 32.3, forward EPS growth prospects of 31.75. So relatively speaking, they're trading at similar valuations compared to their expected earnings growth over the next 5 years. So all things being considered, if I had to pick one of these two today, I would pick Amazon as the better buy, but they're both excellent investments. And if I was an investor trying to pick between these two, let's say I had $100 to invest and I'm trying to pick between these two, I would do something like $60 Amazon, $40 Qualcomm, or 50-50, something like that. They're both excellent businesses. And I think over the next decade, you're likely to have more wealth if you own these two stocks at the end of the decade. If you buy and hold these two stocks for the rest of the decade, I think those investments will be worth more than they are today. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.